Hey, what's up, everyone? This is Silver Slayer. Gold and silver go way up. Gold is up $52 at $1,647.62. Silver's up 51 cents at $17.34. Are we going to see that $18 range again? A lot of volatility in these markets. I've never seen this type of volatility. It is crazy. Gold is almost that $1,700 range at the 7-year high again. What is going on? This is what this article from Seeking Alpha is going to be explaining. The link will be in the description. And it starts off to say, this is the summary. I've never seen this kind of volatility in the financial markets since 2008. The coronavirus uncovered the stench beneath the bandage that was put on the financial markets since 2008. Of most concern is that we still don't know how much damage has done to the system, and we are jumping into the NUGT, which is triple X velocity investment. So, this is some commentary. We use the proprietary artificial intelligence of variable changing price momentum indicator, the VCPMI, to analyze the markets based on supply and demand. It is time of major moves in the markets. So, he compared the recent market moves to the 1929 crash in terms of the collapse over the near term in terms of magnitude. Gold is trading last at $1,600. And as I write this report, and actually it's way ups from that. So it is up $31.60. And by the way, let me show you these charts right here. This is the gold chart. So it was $1,600, but we see this huge spike. And then let's look at the silver chart. Silver did something very similar. Very, very similar. You see a lot of volatility here. This is very rare. You see how silver gets higher highs and lower lows? We're seeing a lot of volatility. So, gold collapsed from $1,691 on the 24th. And as we heard rumors that the coronavirus was spreading quickly, it had moved beyond China. This was all the equity markets needed to break back the 11-year bull market. The coronavirus uncovered the stench beneath the bandage that was put on the financial markets since 2008, particularly in relation to the record debt in the US and globally. Now this black swan has changed the entire complexion of the economic system. Of most concern is that we still don't know how much damage has been done to this system. Last week's historic reaction in equity markets and in the US dollar, traders are realizing that this is not a good development for companies with interest in China who depend on products from China. Whether the virus is spreading out of control is irrelevant to the reaction that the financial markets are experiencing based on the fears that the world may be heading for a deep recession. I have been talking about recession looming way before the coronavirus, and this is still true from the dollar index to how many trillions of dollars in debt we are to how interest rates are working and inflation. So the coronavirus is almost just putting the icing on the cake in terms of that. So last week, gold opened up what I believe is a great opportunity in the precious metals market. In relation to equity markets, we see this down move as first. Let's go up to the charts to see what they're talking about. We see this down move as the first move of a new bear market. The extent of this move has put market into extremely oversold position and subject to swing rallies. It could bring the E-mini S&P 500 back up to the 3,200 level. We'll see what the market is as we look and sell one weekly level at $3,224 and sell two at, not dollars, but sell two at $34.98. We're trading around $29.44, and if you close above the 3,039 level, we signal will activate $32.24. So, this is gold. Gold is trading last at $1,599. The market is also approaching what appears to be a major level of support. The average price is $1,594. Gold is trading above that daily average. So we have a bullish price momentum. Closing above the $1,608 level brings the weekly signal, which activates $1,651 on the weekly basis. The short-term target is $1,624, and under the market we have support on the new low, or on the low of $1,564. Right below that is $1,537. If we come down into this level of $1,537, we begin to link the daily and weekly numbers into perfect alignment. We would be in a high probability area of finding demand. We are looking to add to our positions. We took an unexpected drawdown in our positions, but we are only subject to market fluctuations, not margin calls. We did not have a margin call. We are down in our positions, but it gave us an opportunity to add to our positions, an incredible opportunity in the metals. So it's saying it gives them opportunity to buy one last time as they're cheaper. And this is what we talk about when prices are down. We saw, from that huge, let's go to like the 1 month. So let this load real quick. If it does load. Okay, so we saw this huge $18.50, and then it went way down. This is only opportunity. All this is opportunity to buy cheaper silver. It's like a discount. It's like you go to the store and you want discounts, you want sales, but when it comes to precious metals, people freak out when it gets this low. It's going to go back up like it always does. See the 1 week, it goes back up, and now look, the 24-hour mark, way back up here. So it's not, you need to understand that markets go up and down. That's just what they do. And the more you have the fear and the panic mind state behind it, that's when you make irrational decisions. That's when panic selling comes into play, and that's when you can sell yourself short and be put at a very, very, very bad disposition. And that's really where a lot of people make the most mistakes at. That's why I make a lot of videos on how to avoid impulse buying and panic selling. Now, if you can understand how to analyze these markets, understand what's going on in the economy, whether it's the dollar index, whether it's stock market volatility, whether it's the economy, the coronavirus, so many different things, from the Iran tensions, Trump's impeachment, to the Hong Kong protests, so many different things happening. But if you can learn how to incorporate what's going on with all that stuff, along with the chart standpoint from it, or learning how to read these charts, then you can more accurately depict what's going to happen to prices. And more, especially with silver, it's more than likely it's on the potential side rather than the downfall. So anyways, we are jumping into NUGT, which is a triple X velocity investment. It is a very volatile market. It fell about $14 this week and is an extremely oversold position. When gold traded at about $1,600, NUGT was at $33. We are now at $25.66, and I recommend to our traders to add to their positions in NUGT. I believe we are in a decade opportunity. NUGT is the best buy in a decade. Hold on to your position here as the market adjusts back up. We can see $1,650 reached once again. Sell 1 weekly at the 50s target for NUGT. Then we can see where the market wants to go from there. So anyways, he's talking about, that side of it. I'm talking more from the precious metals standpoint. And just to recap a little bit, the gold and silver are in very, very interesting positions. And I say that very strongly because we are looking at bullish terms. Just because silver shot down a couple dollars over the last couple weeks does not mean that it's going to keep going downwards. And it actually gives more potential because it stood above some support lines that it had to stay above. So we still are looking for a rally to form, especially with these levels, higher new lows or lower highs. That's giving context to say, silver is building stability even when stock markets were setting record highs, or even if stock markets are crashing. Regardless, supply and demand runs the game, and that is the name of the game. So hopefully, you can see you can see the bigger picture to see that, these prices are actually confirmed, and they have a lot of opportunity, especially silver, to go up. Like the video I was mentioning yesterday, everything is pointing towards silver. Apart from gold, gold is a great investment. Gold is great to diversify in, but more specifically, silver looks like the catalyst for extremely large uprisings. That's really where the most potential sits. And so as an investor, you're looking at opportunity and potential. And silver has both of those. Silver gives the opportunity, how much it's used for in the economy, given, all the different things it's used for, especially with EVs, given that side of it, but also the potential to rise along with the gold to silver ratio sitting at 95-1 right now. Extremely exaggerated, meaning that silver has to appreciate or gold has to depreciate, but more than likely, it's going to be silver going upwards, right? You know, the gold to silver ratio has to correct back down. It has to start to become more equal to some extent, whether it's going down 5 points or 10 points, whatever the case is. It has to normalize to some degree, and it's looking like that's going to draw silver prices upwards as well. So anyways, like I said, the link to this article will be in the description. I'm curious what you think about this. Where do you think these prices are going to be headed? Do you think the coronavirus has a nice pull on the markets, or do you think this has other factors with the recession looming, or just gold as a safe haven asset along those lines as well? Anyways, I'm going to wrap this video up here. Thank you so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.